I'm curious, we're looking at a $20 billion valuation. How does the company justify such a valuation?
Actually, one of the things that we learned as a part of this process, and I think a lot of companies go through this journey, is that we don't decide valuation, right? We don't decide it, the media doesn't decide it, the analysts don't decide it, eventually the investors decide valuation. And we're very fortunate to have finally be able to say, because we announced our anchor round last night, that we have the bluest of blue chip investors from around the world who have shown tremendous support in our anchor round, which we closed last night, and some of the names Rish already mentioned, and we're just very fortunate to have the backing of folks who believe in our journey and who have seen this play out, seen this value creation play out in payments, financial services around the world. So terrific to have them on our journey, and a big sort of welcome them as a part of our shareholder group.
Reports suggesting that it was 10 times oversubscribed. Can you confirm that?
I'm technically not allowed to confirm that, but we did have a huge amount of interest from global blue chip funds, Indian mutual funds, technology funds. And one of the most gratifying things for us is, as you mentioned at the top of the show, this is the largest IPO ever in India. It also makes it the largest anchor. But obviously, we're a different kind of company than most companies that are listed in India. There are very few sort of technology-led consumer internet companies that have come out in the Indian market. And that is opening a large set of new investors. So even when you go through and look at which are the specific funds that have invested in Paytm, many of them are investing in an Indian IPO or an Indian anchor round for the first time ever. So we are grateful, and we are delighted that we are able to open whole new investors to start investing in India. And we think that'll be good for the ecosystem, and that'll be good for other companies who do the types of things that we do.
Madhur, okay, you mentioned the journey. You've also increased the amount of shares you're selling. And on top of that, I'm guessing this is also a bet on growth for Paytm. Give us a sense of expectations.
Oh, yes. We are absolutely pegged against the growth of digital payments, digital financial services, and overall the internet ecosystem in India, right? So one of the things that investors do look at very closely is how fast are we growing, our users, our transactions, our merchants, our GMV, our revenues, and so on. In the June quarter in the last June quarter, where we showed the results about 10 days ago in our prospectus, we showed that we grew year on year 62% in revenues, and we also basically tripled our contribution margin. So I think that's the sort of momentum that we would hope to sort of double down on. And clearly India gives you that opportunity. And the services that we have, online payments, offline payments, financial services such as lending, insurance, wealth, Paytm Payments Bank, and a bunch of consumer internet activities that we do, such as ticketing, advertising, all of them have very strong tailwinds. And we're just getting started. I think we're scratching the surface of what is the potential of digital payments, digital financial services in India.
But this is it, isn't it? Payment and financial services contribute 80%. You've got also ancillary revenues as well. Give us a sense of, your gross merchandise value too, and how that's been increasing.
Yeah, so our gross merchandise value, and in this, unlike some other payments companies, we don't include P2P payments. We only include merchant payments. So that is, last quarter was about $26 billion, and it was up over 100% year on year. So clearly in India, like in many parts of the world, we are seeing an acceleration of adoption of digital payments, and we are right at the forefront of that. So over 100% GMV growth year on year in India. I should just add, Rish, that what you sort of described as ancillary services, they're actually quite core to what Paytm does. These are commerce and cloud services. In addition to doing digital payments and digital financial services, we have a big bet on what we call commerce and cloud. What that does is offer consumers an ability to experience the super app, and for merchants to be able to grow their business. And that's key for lock-in and key for monetization for us.
Give us some targets, though, Madhur. PwC estimates that digital payments market will be worth about $1 trillion by 2025. How much of the market are you targeting?
We have an industry report in our document that suggests that mobile payments, including P2P in that case, because that's what the industry experts did, was $600 billion last year. That just, once again, it includes P2P, so it cannot be directly compared to the number that I just described, which is 26 billion a quarter for us for merchant payments. But just to give you a sense, 600 billion going to $3 trillion, so a 5x growth in 5 years. Given that we are growing 100% year on year, I personally think that those estimates are a little bit light, and the tailwinds in India are much stronger. Listen, if India is going to have 500, 800, 900 million smartphone users, being able to do digital payments easily is the starting point of having a transaction journey on the app. So when you use the apps on the phone, you can either just watch content, or you can have it be a part of the transaction economy. And more people are starting to become part of the transaction economy. Even the apps which are content apps are becoming paid apps. So you have to be a part of the transaction economy. So that's the tailwind that we're talking about, which is that India has about 400 million internet users, going to about 900 million according to that industry report. And more of them will want to do some transactions online. And people are discovering that being able to do transactions online is dramatically easier and dramatically more ubiquitous than being able to do it through other methods. And that is true everywhere around the world. That is particularly true in India, where merchants in many cases don't even accept card payments and so on.
Madhur, you've got millions of users. You've got their transactions. You've got their data. You know what they're spending money on. Are you protecting that data, or are you selling it?
Oh, we protect that data quite zealously.
And how do you use it? How do you use it?
So what we do is, I'll give you maybe one example of many. So first thing that we use that data for, or maybe I'll give you a couple of examples. The first thing we use that data for is fraud prevention, right? Because if you're a payment system, you need to make sure that you know exactly who's making the payment. So we're obsessive about KYC. So that's how you protect the merchants, and that's how you protect the platform. We also use some insights from that data to help our lending partners lend better. Because one of the problems in India, which is still to be solved, is that vast majority of Indians don't have access to formal credit. And as many of us know, access to formal credit can be one of the key drivers of pulling somebody up the economic value chain, whether it's a business or as an individual. So we partner with large financial institutions, and we share some insights with them. We don't actually share the data. We just sit down with them and say, okay, this is what we think of as the top decile customer, second decile, third decile, and so on. And we are able to give them insights on how to underwrite better. So, and obviously we give them distribution on our app, we give them collection services and so on. So we are using that to expand credit in the country in ways which are totally compliant with how regulators want us to use data or share data or not share data.
Madhur, it is a very competitive space. You're leading in terms of merchants, but not in terms of retail transactions. In fact, Google Pay, PhonePe are leading. They have about 85% of the market share. I mean, how are you competing? What's the strategy?
That data is actually commonly misunderstood. This is not the first time there's this confusion about that. The market share data that you quoted is for one payment network in the country called UPI. There are many different payment networks in the country. UPI does share data publicly, so it is a common misunderstanding for folks who use that data as a proxy for market share, but that is only one network. There's also in India card payments, there's also mobile payments which happen outside of that network, particularly in Paytm's case, because we sign up consumers, we sign up merchants, and we allow them to do payment transactions between them using all payment methods, and UPI is only a fraction of our transactions. That data doesn't really gel. That data is not really complete when you're evaluating Paytm. So that's something that I just wanted to point out, which is that we have a significant share in UPI person to merchant transactions, but we also do many different types of payments between consumers and merchants, which is the data that doesn't get captured in UPI. To answer the sort of broad point in your question, the key is to offer consumers more and more use cases and more payment options, because users don't want to use the same payment option for every transaction. And as they evolve,
Madhur,
they want to use more payment options. So that's what we offer to our users.
Madhur, will those payment options include Bitcoin? And in other words, where are you with cryptos?
Bitcoin is not regulatory, is still at least a regulatory gray area, if not regulatory banned in India. We have taken the view that we will always try to comply with all regulations, both in letter and spirit. So at the moment, Paytm does not do Bitcoin. If it was ever to become fully legal in the country, then clearly there could be offerings that we could launch which would benefit us and benefit users.